Hello everyone. Welcome back to Educator Guru YouTube channel. In my previous video, I had explained you the first PUC Accountancy model question paper answers with explanation and tips for section A and B. In this video, we'll go through the part C of the same model question paper. Part C consists of 5 questions, out of which you'll have to answer any 3 questions. Each question carries 6 marks. So now let us go to the first question, that is question number 22 in the question paper. So the question goes like this. Use accounting equation to show the effect of the following transactions of Ravi traders. A. Started business with cash rupees 1 lakh. Bought goods for cash rupees 20,000. Rent received rupees 5,000. So now, first we need to understand what is the accounting equation. Accounting equation is nothing but assets is equal to liabilities plus capital. So always liabilities and capital should equate with the total assets of the business. So here first is started business with cash 1 lakh. So to business, cash has come in. Cash is an asset. So in the asset side, you'll write cash of 1 lakh. Next, there is no liability in this transaction. When the business has been started, capital investment has been made through cash of rupees 1 lakh. So the liability 0 plus capital 1 lakh. So asset is equal to liabilities plus capital. Second, bought goods for cash 20,000. So we have cash of 1 lakh already, where 20,000 has gone out of the business because we have bought goods by paying cash of 20,000. But the goods has come in. Goods is nothing but stock, which is an asset. So worth of 20,000 has come to our business. So we'll have to add back 20,000, which is equal to 1 lakh. There is double effect. One is in cash, another is in stock. And here there is no liability or capital change. So it remains the same. Next, rent has been received 5,000. So here cash balance was 80,000. That is 20,000 was paid for goods and stock value is 20,000 and rent has been received. So the cash value has increased by 5,000 rupees. So 80,000 plus 20 plus 5,000. So the total asset is 1,05,000. Here also it becomes 0 plus 1 lakh plus 5,000, 1,05,000. In liabilities and capital side, 5,000 has been added. When the cash has been received through some rental income, it increases the equity side of the accounting equation, which is additional revenue that is generated from the rent received account. So in liabilities plus capital side of the equation, 5,000 has been increased. So now you can see the accounting equation is balanced, equated. That is assets is equal to liabilities plus capital. So this is how you have to answer for question number 22. Hope you are all clear with this. Now let us move on to question number 23. Record the following transactions in purchase journal of city stationeries for the month of July 23. They have given 4 transactions. We'll go one by one and also answer at the same time. First, you need to understand here that what they have asked. They have asked purchase journal. Purchase journal is a journal book where only non-cash transactions are recorded. If the purchase is made by paying cash, then that entry will appear in cash book and not in purchase book. So first that you'll have to keep in mind while making entries in the purchase book. So here first you'll have to write city stationery purchase book. Then the columns goes like this: date, inward invoice number, particulars, ledger folio, and this is your calculation column of amount, inner column, and the outer column is the final answer amount. So now first let us go on with the first transaction. First transaction has happened on 1st July 2023. So it is bought goods from Ravindra Traders. So what they have bought? 10 notebooks at 25 rupees each. So 10 into 25 is 250 rupees. Second, they have got 20 registers worth rupees 50 each. And on this, they have got, on 1000 rupees, they have got 5% discount. So on 1000, 5% becomes 50 rupees. This you'll have to deduct from 1000 rupees. So the total will be 250 rupees plus 1000 minus the discount, trade discount, which they have got on the registers. So from Ravindra Traders, it is 1200, which the company, the business has to pay. So next, the second transaction has happened on 5th July 2023. It says purchased from Gokul Stationaries. Gokul Stationaries. So what have they purchased? 20 color books at 75 each. So is equal to 20 color books into 75 rupees plus 100 pack of pens, 100 into 40 rupees each. So 100 into 4. So the total will be 5,500 from Gokul Stationaries. Next, 10th July, they have purchased from Hema Book House for cash. So here they have paid the cash. So this entry will not appear in the purchase book, but that will appear in the cash book. Next, so you'll have to ignore this transaction. Next, the transaction has happened on 15th July 2023. So they have purchased some pencil boxes from Ganga Stationaries. So how much? 20 color pencils, 120 per box. So 2,400. So the total of purchase book for the month of July is, you'll have to total 1,400 plus 5,500 plus 2,200, which comes to 9,100. So this is how you'll answer in your exam. Now let us go on to question number 24. Enter the following transactions in the petty cash book under the impressed system and balance it. So impress system is a concept where the cashier has been given with some fixed amount of cash, and with the cash he'll have to record the expenses which he spent for the business and record it in the petty cash book. So here now we'll see the transactions first. 1st February, they have received a check towards petty cash 500 rupees. So first you'll have to enter the date. On 1st February, they have received, so check. So check is nothing but to bank. In bracket I'll write check. Rupees 500 they have received. So on received column, I'll write 500 rupees. Next, on 2nd February, they have paid for cartage on goods. So, by cartage. So, cartage paid amount is 25. So, also under my cartage heading, I will have to write 25 rupees. Then, on 6th February 2023, by taxi fare, the total amount is 70. So, under traveling expenses, I'll write 70 rupees. Next, on 8th February 2023, they paid for postage by postage and telegram. Total amount is 30. Under postage column, I'll write 30 rupees. Then some stationery have been purchased on 12th February. So by stationery, it is in total amount paid 65. Under stationery, 65. Next, 15th February, they have paid wages. Total amount of 50. So under wages column, 50. So now let us total each column. So the total income, what the cash or check received was 500. The expenses made was 240 rupees. So the balance carried down, that you have to write, by balance carried down on 15th February 2023 was 500 minus the spent amount 240. The balance is 260 rupees. Okay. So the balance is 260 rupees. So the total will be 500, which will be matching with your thing. Next, on 16th, balance carried down. Balance brought down should also be returned. Balance brought down is 260 rupees, which is closing on the 15th February 2023. Next. Hope this is clear to you all. Now, let us move on to question number 25. From the following particulars given, prepare a trial balance as on 31st March 2023. So they have given purchase, sales, bank loan, machinery, cash, capital, debtors, creditors, bills receivable, and bills payable. So first you'll have to write the heading trial balance as on 31/03/2023. This is common thing that you have to write before preparing a trial balance. Then the columns goes like this: SL number, particulars, ledger folio, debit balance in rupees, credit balance in rupees. So first we'll go one by one. Purchases. Purchases always shows debit balance. So in debit side, you'll write 95,000. Next, sales. Sales shows credit balance, which is 1,36,000. Then bank loan. It is a liability. So liability shows credit balance, 20,000. Next, machinery is an asset. Asset always shows debit balance. So the amount is 50,000 on the debit column. Then cash. Cash is also an asset which shows debit balance of 46,000. Next, Capital is always a liability to the business and always shows credit balance. Next, creditors is also a liability for the business, which has to be paid. That is 17,000, which is credit balance. So you have to put it under credit column. Then debtors. Debtors is an asset that will have to yet to be received. So that is 80,000 under debit side. Next, bills receivable is also an asset and shows debit balance of 4,000. Last one, bills payable is a liability showing credit balance. So now let us total. We have taken all the 10 items into consideration under trial balance. So let us total it, like 4,000 plus 80 plus 46 plus 50,000 plus 95,000, which comes to 2,75,000. Here also we'll do the same thing. 2,000 plus 17,000 plus 1 lakh plus 20,000 plus 1,36,000, which comes up to 2,75,000. So debit balance is matching with the credit balance. It is equating. So hope you all understood this concept of preparing trial balance. Now let us move on to the last question of this section. Question number 26. From the following balances obtained from the records of Mr. Ravi, prepare the trading account for the year ending 31st March 2023. So they have given opening stock, purchases, sales, carriage inwards, closing stock. So the format goes like this. Trading account for the year ended 31st March 2023, debit, credit. The table consists of 4 columns: particulars, amount of debit, particulars, amount of credit. So first let us go by one. First, to opening stock, 2 lakh. Next, purchases, 2 purchases, 20 lakh. Next, sales, buy sales, 35 lakhs. Next, carriage inwards. Carriage inwards is always an expense that has to be considered in trading account, but carriage outwards is an expense that has to be considered under profit and loss account. That you'll have to be careful always. Then they have given buy closing stock, 5 lakh. Okay. Now let us total the credit side. 35 plus 5 becomes 40 lakhs. Here also will total. So the difference is called as, here the credit side is more than the debit side. I mean the income is more than expenses. So you have profit. The profit is called as gross profit carried down. That is equal to total of 40 minus 2 lakh minus 20 lakh minus 10,000, which comes to 17 lakh 90,000. So this is the answer. I mean gross profit. So this is how you have to write trading account in your exam. This is the balancing figure. Hope you were all clear with the section C of the first PUC Accountancy model question paper. Any doubts, you can post it in the comments. And also please subscribe to our YouTube channel and share among your friends, like this video. And all the best for your exams. Thank you.